these past few months, these heavy days have happened a lot too because the price has been rising. We've seen a lot of new entrants into the marketplace, which is good. And you basically have people who are learning the fundamental case. They saw what happened in 2011. They look out further and they hear, okay, the Federal Reserve is now launching not QE4, and we're almost, I think we're over 4 trillion. They have this crazy thing going on. The Fed, New York Fed, intervene in repo markets, whatever the hell that means. But it's a lot of money being handed out.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and here is part 2 of my interview with James Anderson of the Silver Doctors, where he talks about what he's been seeing recently in sales volume. Are people actually buying or selling gold and silver? And also how he sees this situation unfolding, whether it's a gradual rise or whether there will be a big spark. And then lastly, he gets into whether China and Russia are actually aware of what's going on with the manipulation. So with that said, here we go. So I'm curious, what have you seen, general perspective, as we saw the prices of both gold and silver rally over the past couple months? Has it been a substantial increase, no change? What does that look like? And maybe again, if you can compare that to some of those other periods like 2011 or 2008.
Sure. So the last, let's see, I'm looking at the chart right now. So this year, our sales have been, kind of the same as 2018 until the last few months. This summer has been very buoyant. I think it's a combination of a few things. When I've been in this industry over 10 years, and so I've seen kind of the bull and the bear markets cyclically inside of this, I think, 21st century bull market overall and bullion. And I can see the differences between when there are prices that are rising generally, you have new people who are getting interested in the market because they see momentum. And there's a lot of people who are like, I want to be a part of that because it looks buoyant, it looks like it's going up, and it's got a good, they look at the price chart and it looks like it has potential to go higher. So you have a lot of new people who like to buy their first purchases in a market that's rising. And their first purchase, they don't want to be in a market that's falling like a knife that scares the hell out of them. Whereas if someone who is a grizzled stacker who's been doing this for years, they're not afraid of buying on the dips. They actually see that as being the best time to be buying. And there's a differentiation between, it's just a matter of experience and time. The first time buyer who likes buying on the way up, 5 years later, they've learned all the tricks and they kind of understand when there's any type of waterfall decline, that's if you're buying, that's the time to be doing so. And so when working in the industry, when you have your heaviest days, a lot of times when prices were falling, because people want to catch the prices when they're lower. And then as well, these past few months, these heavy days have happened a lot too because the price has been rising. We've seen a lot of new entrants into the marketplace, which is good. And you basically have people who are learning the fundamental case. They saw what happened in 2011. They look out further and they hear, okay, the Federal Reserve is now launching not QE4, and we're almost, I think we're over 4 trillion. They have this crazy thing going on, the Fed, New York Fed, where they have to intervene in repo markets, whatever the hell that means. But it's a lot of money being handed out every day to the banks. Why do they need all these loans, et cetera, et cetera? So people are very, I think, they have reason to be concerned, and they have reason to be considering gold and silver, especially in the coming decade. And I just don't understand, if you understand the fundamental case for just having a small allocated portion of bullion, I just think that it makes sense. 10, 20%, something like that in bullion for the coming decades should be very helpful to an investment portfolio.
Well, I've blown through the 10 or 20% mark a couple of times.
Sure.
In fact, when I left the trading floor, everything that I had was in bullion, mining stocks, or options on miners, which,
well, it makes it easy. It makes it easy to keep track of, right? I mean, just following one industry.
I mean, and I don't say that as necessarily recommending for someone else to do that, although working at a trading shop where there was a very poker-like mentality where you play what's dealt, but when there's something that's extremely out of line, there are times to go all in.
Right.
Obviously, I was a little early on that, although I guess what I'm curious to get your opinion on, to me, when you look at the way the market's structured, think I've mentioned to you before, I'm doing a book on silver, and one of the questions I asked David Morgan, Andrew McGuire, all the other guys that were in there is how many paper claims are there for each physical ounce? And I routinely got an answer of 500 or more. So for
Mhm.
every piece of silver that's owned, which has largely come about because we have banks slamming unbacked paper contracts. So when I hear people talk about, is it going to be a slow, gradual rise? Again, I'm not trying to get into the like silver's going 1,000 tomorrow or,
Sure.
or that type of thing. But to me, it seems like whenever this gets resolved, it almost has to be kind of like the same way you had the mortgages. You prop something up into artificial territory.
Mhm.
It seems to me it has to react sharply. Obviously, you're looking at silver all day, so curious if you're seeing the same thing or maybe something different.
Yeah, I don't think it's a slow rise. And when you look at silver historically, when it goes through, especially in the full fiat currency era, when it goes through its era, there's times where it rapidly advances. It happens over 12 to 18, 24-month periods. So my bet is that gold will be the first to get to, obviously 1900, get beyond into the 2000s. Silver will be lagging at that point. Silver will be underperforming. People will be bitching about how silver's not doing what gold's doing.
Where do you
And
think
then we will,
silver's trading when gold hits 1900 next time?
it's probably like 60, gold silver ratio will be around 60. So 1900 divided by 60 is 30 bucks, 31 bucks roughly. Maybe as it gets over 2000, gold does, we'll start threatening 40s. But to get over that $50 hump will be very interesting. When it does, it'll be very interesting to see what the world looks like and what this entire industry looks like. All the new talking heads who will be around, and the young whippersnappers on YouTube who are saying silver's. We saw it to 2010, 2011, so it's going to be really interesting to see the type of characters that come out of the woodwork then.
Well, hopefully they'll remember the old timers like us. I just turned 41, although I guess you spend enough time in precious metals, it ages you. Uh,
That's funny.
Although, fortunately, one of the things that counteracts that is that there are folks like you that have great shows. And you did a great interview with my friend Chris Powell. I listened to it last week, may have been in the queue for a while, but one of the things you touched on with him, and Chris Powell, obviously part of GATA with Bill Murphy, they were mentioning how there are, I believe, WikiLeaks cables or other sources that basically confirm that China and Russia are not, these bumpkins that Wall Street, tries to make it out like, oh, they're still using an abacus. But in reality, are very well aware that the metals markets are being manipulated.
Right.
I think Chris said back even Russia, I think he said 2004,
Right.
that they were aware of this. And I figure if I'm able to figure the piece this together with the
Sure.
access to information and money that they have. So how does that shake out? Because it's especially China, if you're getting labeled currency manipulator, trade war, and then on top of it, U.S. president. I mean, one thing to disagree, but without taking sides here, I think there's a degree to which he sticks it in their face.
Right.
So it seems like a very vulnerable area. Any thoughts you've had since you talked with Chris about that?
Yeah, I always found it interesting that GATA was one of the helpful agents in inciting Russia to begin stacking gold in heavy amounts. And now they've got more gold per their GDP than any other nation in the world, which is it's just always interesting that a small little organization like GATA would have a little bit of an effect like that to crystallize the situation in the early 2000s for gold and the ridiculous price it had versus the fundamental factors of all the M1 and M2, et cetera, et cetera. Russia obviously keyed on that. In 2005, if you look at their chart of gold sales, it just goes straight up, and they were at, I think one of the conferences, one of their representatives was there, Sergey, I forget his name, but it's just, it's very interesting in the sense of how tiny the world can be in this sense. So, and on the China front, I think China in 2008, financial crisis. You had Tim Geithner go over there and try to calm their nerves, and you had them really fretting about, hey, we've done all this business with the United States, and we have $4 trillion in your treasuries and your debt, and we don't want you to devalue the dollar because fundamentally it probably should be devalued, but don't devalue it because we have way too much savings in it. And he went over there to calm their nerve. And my bet is it made a tacit agreement to allow China to move some of that savings into gold bullion. And if you look at the China gold flows from 2008 after, it just goes through the roof compared to what it was before in terms of transparent gold flows. And my bet is there's a tacit agreement for the West. I mean, it's really a question of national security for the West to allow that much gold to be flowing over to China. I don't necessarily think they would allow it unless there was some quid pro quo about why they're allowing it. So I think there's more games afoot here than we know. The U.S. Treasury knows a lot more than we do. We can only sit here and guess. But ultimately, it's a game of fiat currencies and a lot of things that are lies, not true, not real. So you have to kind of read beneath the what's going on and kind of look at the actions and not listen to the words so much. And just looking back, those actions that China and Tim Geithner, since China helped bail out. I mean, they basically helped bail out the global economy. They printed the shit out of the yuan. Sorry to use that language. But if you look at their yuan, no one's ever done this. No one's ever created that much currency as fast as they have. And my guess is that, yeah, we are in a trade war, but I think there's more going on than meets the eye. I think underneath it, there's something bigger that's happening. And we'll probably know that looking back 10, 20 years from now. But right now, I just think that we're still in the dark. We're still operating, a lot of us, in the dark as to what's really afoot.
You mean Trump and Powell and Geithner and the gang aren't giving us the full
Well,
picture? I mean, who could...
Yeah, right. Like President, like Emperor Xi went over to Mar-a-Lago, right, and they hung out for a while before the trade war started. I mean, you don't think there's ever agreements where they're like, yeah, we'll let this thing play for the next 3 or 4 years, and here's the longer term thing that we're going to agree to, and we'll let you take Hong Kong, maybe eventually Taiwan if you do this. I mean, this is the kind of stuff that adults would think about, but people who are emotional and want to get excited about xenophobic topics or stealing of intellectual property and start calling people names, etc. I think people get lost in a lot of that stuff, and I mean it doesn't make sense. You would think empires would want to work together because their ultimate enemy is their citizens. It's not even the competing other empire, really. It's that their citizens won't revolt on them. And we're seeing that more and more now. And if you look around the world, I mean, in places that you never would have thought, you see, buildings getting burned down in Chile, for instance. That to me is very surprising over something very innocuous, like we're raising the metro fares. Obviously, there's a lot of pent-up rage, and it's not about metro fares. There's something else going on. It probably has to do with the excessive, the fact that your president's a billionaire and the rest of the people are peons who have no money. And it's all free market, right, over there. It's not what they argue. It's Chile is so successful because of the free market. Well, you still have a lot of angry young citizens who are willing to take violence in order to make their point across. So we live in interesting times, Chris, and I think obviously there's a lot of rage of ordinary common citizens, but I think the empire, the empires and the people who rule the empires, they're aware of this, and they're working on a larger system afoot. And I think we don't know about what's really happening unless we dig deeper into the details and kind of try and look ahead, not so much behind, and try and figure out where it's going.
Yeah, and it touches on something you and I discussed before we hit the record button about that movie Vice that I just watched last week with Dick Cheney. And it's so when and not necessarily that the movie had everything accurate, but I think there was a lot that was pointed out and portrayed about how we're thinking like, well, there's George and Barbara Bush, the good old American. But you see really how so many of these things are decided by, all right, well, this guy cut me loose, so I'm going to go on your side. You kick $4 billion in here and we'll do this bill. And so it really, like you said, it is going to be stunning to find out some of these deals that are going on behind the scenes, whether...
And now the deals are central bank prone. It seems like the central banks are going to tell the politicians, well, here's how it's going to work. Politicians will have to come out and sell it to everybody, but the real decision making is going to probably happen there. I mean, go look at what the central bankers are doing and what they're talking about in the coming years. And we're probably going to see it come from that.
Yeah, and along those lines, back to China, we've seen about 120 million ounces of silver supposedly go into the silver ETFs. Heard some people speculate that that could be China.
Mm-hmm.
When you think about it, it's maybe not impossible, but hard to think who else that would be. And certainly, given the position China is in, if I were running their desk, I'd be buying silver. Do you think that could be them, or any thoughts on who's purchased that metal?
Yeah, that I think that that run up in silver ETFs is very similar to let me pull up the chart here, but it's similar in timing in terms of especially of late in terms of the price action. I mean, the price action for silver has gone up a lot lately, and I think that it's mostly there's probably a handful of billionaires who are going long silver and using ETFs to do it. I don't necessarily think China's using SLV as if China wants silver, they're going to probably do it in other machinations and other methods. I mean, they mine a decent amount of silver, and then they can obviously import a lot of silver if they'd like. If China has any brains, I think they would be smart to have at least a strategic holding of silver in case there was ever some fallout in terms of world trade. Because I don't think they have a huge amount of silver reserves. I think they do mine a lot more in gold reserves, but I don't think their land has as much silver as other places like Mexico, Peru, etc. So if they were intelligent, and I believe they probably are, they probably have at least 2 or 3 years of strategic silver in order to still be the world's workshop essentially, and use that in some of the products they make. But this idea that they're in the silver ETF, I'm not necessarily sold on that. I think a lot of this is you have big money who are looking out and saying gold is going to do well, and silver is going to be the one that outperforms gold. And so you're getting a lot of people who are coming into those ETFs, I think, for the long term, looking at silver to 50 and beyond over the coming decade. I think that's what this is, I believe.
That is part 2 of my interview with James Anderson of the Silver Doctors. The third and final part is going to be posted tomorrow, where we dig into the Department of Justice investigation, into JP Morgan and some of the other traders, and whether it's a real legit investigation, whether it's just for show, how that plays out. And then lastly, James, actually, I asked him, for folks who are actually interested in buying silver, what actual types does he recommend? So that's all on part 3. Hit the subscribe button so you'll be notified as soon as that comes out, and I'll see you tomorrow.